Good morning, traders. It is Friday. Happy Friday to everybody. It is 8:03 a.m. Chicago time, 9:03 Eastern on this 10th of September 2021. This is episode number 2070. Just give me a quick mic check. Make sure I'm not running hot or too low. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. I'm going to show you the conversion trading pre-market summary sheet. Note that this is static here. The shot was taken a couple minutes ago. The market posture is mild risk on relative to yesterday's settlement prices. The S&P is up 19 points. 19 points. The Dow's up 173 points. NASDAQ up 65.5 points. So they're all hovering at somewhere between 42 to 50 basis points up from settlement. The Russell showing some strength here, up 9.9 points, pulling back a little bit recently here in the last couple of bars. Crude sees a pop higher as it recovers from the news yesterday that China's dipping into its strategic oil reserve. I guess that's not happening, and it's popping higher. Copper also popping higher. You need to watch metals because the big news overnight is the U.S.-Sino diplomacy being opened at the country executive level. In other words, U.S. President Biden and Premier Xi Jinping met directly to speak about what they have in common and where they diverge. This is an attempt to normalize relationships a little bit better, and the market took a liking to that. You'll see a lot of the movement higher is during the Asian session, and the beneficiaries are commodities of this, specifically metals. Remember that futures rollover is in full effect currently, and that will continue. We'll be pretty much done with it next Wednesday. U.S. Futures index futures are rolling. Normally we would be trading December today, but I'm still going to continue to trade September. September is ahead of December in volume. Still, that's going to switch at some point during the session, but in the interest of keeping things consistent, I'm sticking with September. September now has 200, well, September on the aggregate, including spread trades, has 201,000 versus the December contract, which has 179,000. So September remains ahead. So I'm sticking with September. That's the bottom line. Pre-market, Kroger released. Kroger really released some strong earnings, but the stock is trading lower. Kroger is a grocery store chain, a pretty big one. No post-market close releases, and the only number we have today is wholesale inventories. Specifically, the ES has traded 120,000 contracts so far with a high of 45.14. I want to remind you that yesterday at this time, the S&P had an overnight high of 45.13.5. So we've poked through yesterday's high by a couple ticks here, and are trading basically in line with yesterday's pre-market. 45.10 point of control. Yesterday's point of control was at 45.10, and it shifted to 45.01. And then the low, 45.88. Yesterday's low was 45.85. So I'm simply drawing a direct comparison between today's action and yesterday's. Overnight inventory shows 0. That's incorrect. Overnight inventories is at, let me pull that up. It's unfortunate that I cannot show this in real time without ruffling some feathers over at the CME, but the overnight inventory is plus 76%, meaning overnight inventory is long volume at 76%. Thanks for pointing that out, Greg H. And that's it. That's it for the summary sheet. Let's move on to what was expected yesterday. So yesterday, the primary scenario is the expectation is for a reversal higher. I expected the 20 to be taken out. The 20 to be taken out, and with a pullback. So I was looking for a pullback to about 0 double O's, and then I was looking for it to push the 20, consolidate it to 20, and get to 27. That's the main scenario yesterday. The secondary scenario is a push to 20, finding resistance there. It might poke through, finding resistance there, falling back through to the overnight point of control, which was at 45.10 at the time, and then dropping through to 82. If you recall, Tuesday, we had Monday off. Tuesday, I came in and I said, look out for that 82 below. If we take out the 45.10 being last week's low, key area here, and it's still the key over underline, 45.10. I said if we take out the 45.10, we're going to look at pressure to the downside, pushing to 82. And in the extended target, if the market actually gives up any prices, the extended target is I said 45. I'm mixing my handles. 44.82. The extended target is 44.37. 44.37 represents major balance down below, and that's the key area to test below in the auction if we manage to slip through. The other one is 82. It's highlighted here again, just like I highlighted it in yesterday's or the day before yesterday's TB. Here's what we actually got in our review segment. We got the open, we pulled back to 08, so we're seeing strength early on. We had an opening swing that's pretty tight, 12 to 08, and then we have this nice impulse higher. You can see the impulse at 14 points. Nice impulse higher through the 20. So we've taken out the prior day's high, ending the one-time framing down. And so we're looking now for 27. Remember, 27 is the next key target. So now we're looking at scenario 1 without a pullback to the 4,500 or 4,502. A very high pullback, and we're looking for 27. So the long is the key. The long, unfortunately, for me, didn't set up until well into this noise with these higher lows, this higher low, and consolidation at the 20. There was a lot of pressure on prices on the offer, and so you lift the market looking for 27. It reaches 27. This protruding high volume node here, it reaches the 27. And then the expectation, if you're in the Convergent Trading chat room, Head Trader channel, you'll see that we talked about it chopping around in this 27 before the next rotation is decided. It pushes to 29, pulls back to 23, pushes to 29.5, and then puts in a lower high. It went to 23.25, 23, and then it's unable to push prices higher. And so now we've got this 27 basically shutting the door up here back to where 45.10. We're looking now for the 45.10 again, and there it is. Chops, 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 and then we get Fed speaker action, breaks down. We have a nice big rotation impulse down, and then now we're targeting the 82 is what we're looking for. It kind of doesn't carry. It gets to again 92, which was the prior day's level, 92, pokes through to the 90, and then consolidates sideways, giving us what is a triple distribution profile. We don't get to see these very often. A triple distribution profile with very clear breakpoints here, 4508-ish, 4507, 4520, 19, and so on. So this is what we have to gauge ourselves with. And this morning, we're chopping around here at 4511. So we're opening again in this 4511 area, 4510 area, which is where we opened yesterday. Yesterday we opened at 4510 quarter with the point of control at 4510. And we have a point of control today at 4510, and we're opening around 4510. This says that the market has tested higher into the 27. Check, found sellers. It did test the session before in the overnight, and in yesterday's session, it tested below to the 92, and of course it went down as far as 44.85, and it's back in the middle. And so I'm looking for, you guessed it, I'm looking for chop today. Chop, 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 chop. So today is one of those days you're gonna want to back off. Coming into the session, we have a couple things working against us. One, shortened week. Two, rollover. We're deep in rollover here on Friday. This is where a lot of the volume starts to rotate. So we're deep in rollover. We have had decent tests down and decent tests up. We are opening against the LIS, or the line in the sand, or the over-under line at 45.10. These all will likely conspire to give us a head fake type of market. Chances are you will find today's trade frustrating. Now, I'm not an oracle. I don't know what that's going to do, what it's going to do in the future. But given the inputs that we have, given the information that we have, my guess, my bet is that it's likely to be pretty choppy. So please take that into account. Trade your plan. I'm not trying to tell you to do one thing or the other. I'm letting you know how I see things. Do your thing. But overall, I'm looking for it to be quite choppy. So we're still going to expect normal range, normal day range, but we've got a couple things conspiring to tell us that this may be a pretty crappy type of trade. The market has gone absolutely dead here, completely sideways after opening and climbing on that overnight news, and it's just sitting sideways here. We still have the 20 above, the 27 above. We still have the 82 below, and we're holding steady in this kind of dip in between these multiple peaks in the profile, and it's likely to just do a lot of this today. So my guess is outside in type of trade, mean reversion type trading, scaling in type of trading. But please mind your risk as we head into the weekend, and we are rolling into December. If you're not already trading December, today's the last day to do so, in my opinion. Okay, so let's dive in and look at what's expected for today. Statistically speaking, today is one of the worst days for me to trade. Statistically speaking, a lot of exposure with very little return. I'm going to just switch gears for a second. This coming Wednesday, I'm hosting Jeff Snyder. This is a public event. Jeff Snyder is just a big brain on global macro. He is by far the person that I read consistently on his views on the global macro picture, liquidity, repos. He came in and did a repo event with us and shared a lot of information that many investors pay good money for back earlier in the year. He's coming back on Wednesday at 1 p.m. Eastern, right in the middle of the day. We normally have him after the close. We're going to hold this at 1 p.m. Eastern next Thursday. And he's going to be talking about the key elements that are pushing us around here: inflation, Fed tapering, and what the heck it all means, right? We're going to ask him questions about where he thinks things are going. Is this inflation transient? What is he seeing in the repo market? What is he seeing in the overall money supply? How are investors responding to this? And where does he believe things are going to go? I highly encourage you to register, even if you cannot attend, so you can get the recording. The market moves with liquidity, and this guy has his finger right on the pulse here. Go to ct.pro/Jeff Snyder, Jeff-Snyder in lowercase. Go to ct.pro/Jeff Snyder and register, please. We don't spam you, but you will get the recording once it's ready to go. Okay, let's look at today's action. What are we looking for today, people? So first, let's draw the map. Let's draw the map. We have, again, 27. Above there, we have 34. And then we have 20. Below us, we have the 00. The century figure continues to be in play, 00 and 02. Below that, we have the 92, our friend in the 92. And then below that, down here, we have the 82, which I'll again highlight as the untested MC point of control remaining open. Okay, so these are the key pieces, and where we're opening in the middle of this bit right here. We have a single print. We have a single print from yesterday at 4507.75 and down into 4505. So this remains a bit of a void here, this zone. And then above here, we have a neckline at 4519. So we've got 4519 to 4505. This is what I'm expecting to see as today's range. The market's likely is going to open on top of the overnight point of control, on top of yesterday's open, on top of on top of the last week's low, and the expectation again is an open auction that's likely to test down into VWAP. VWAP is hanging out at 4505 at the extreme here of this single prints. Come back to the overnight point of control, push the 20, and then consolidate and hold in the middle. Expecting an inside day today, and expecting it to be a very jarred trade. Open auction, the secondary scenario, open auction that pushes into the 1920 again, attempts to poke through, comes back in to the overnight point of control, tests the 05 from above, potentially the 0002, and then also finishes somewhere in the middle here. Remember, quad witching is next Friday. Quad witching is next Friday, so the 17th. So it's likely to be a very, very sleepy day, and you're likely to see volume, relative volume on a 30-minute basis or whatever, fall off quite early. There's quite a bit of range in the overnight session. Okay volume, not so great, but okay. But overall, this is what I'm looking for. I'll leave you with those thoughts. Good luck. Mind your risk today into the weekend. Don't commit too much on rollover at this today and all the way up to about Wednesday, Thursday. It could get frustrating. Good luck.